Good morning, everyone. I'm Vince Lancy. This is the Goldfix Market Rundown. And there's our homepage. Top left-hand corner is a HeartNet report. Gold is proxy. That's something we wrote for normal people in your life. And there are plenty of other stories we'll touch on in a little bit. First, the topic today is the World Gold Council has a new report out. Paraphrasing the title, gold reached $3,000 in record time. Now what? Well, we're going to tell you now what, according to their report, and what to expect. And we'll give our own little spin on it as well. Starting with the markets. Gold is 30.20. Well, that is the market that I care about the most. But the first market to discuss is the 10-year yields. 436.5 up to almost 3 basis points. The dollar 104.07 down 23, almost 24. The S&P 500 57.77 up almost 17. The VIX is 17.24, really off its highs. Gold is 30.21 up 9, down about 20 yesterday on the lows. Silver 33.43, resilient up 40. That's a normal range now. Copper 510 up 6.5, 6.75, up over 1%. WTI 69.87 up 42. Natural gas 396 up 4. Bitcoin 87,278 down almost 200. Palladium 962 up almost 12. Platinum 982 up 8. Gold silver 90-ish. Soybeans 993. Corn 450 and change. Wheat 553, down 4, down 2.5, and down 0.5. Okay, so the World Gold Council had a report put out March 14th. We're going to cover that today in detail, and we'll also attach it. For those of you who need to see the report itself, we have a lot of content in that post, so let's get to it. Yesterday's posts, we had a technical update. That was yesterday's market commentary. Silver market under strain as Trump tariffs kick in. That's a rewrite, a republishing, an original version of what Bloomberg was commenting on. So that's an unlocked post there. Special bank physical market stress now all but certain. There's a graphic in there that has Robinhood as a reason for things to be going on. That's inaccurate. We're going to give you a new graphic today. Commodity tracker supply distortion. That largely focuses on energy, but it's a very nice slide deck put out by ANZ. CFT Sunday discussion. That's 2 hours of recording if you have the time. And Michael Every in Deepest Everything. Comment on tariffs in context of everything else. The main event, the World Gold Council report key highlights. They have a report titled You Asked, We Answered. Gold hits $3,000 an ounce. What comes next? March 14th, I believe, was its post date. Here's the key points that they make at the top. Gold's new milestone. Gold recently crossed $3,000 an ounce intraday, a headline-worthy event, but the true significance for gold lies in the broader economic trends driving its rise. Price momentum. Gold surged from $2,500 to $3,000 in just 210 days, pushing it 3 standard deviations above its 200-day moving average. Market fundamentals. While gold may face some consolidation due to the speed of its latest move, the combination of geopolitical and geoeconomic uncertainty, rising inflation, lower rates, and a weaker U.S. dollar continue to provide powerful tailwinds to investment demand. Fascinatingly, almost a bullish report from the World Gold Council. Now, we're kidding. We're not kidding, but we're going to make light of that in a second. We have the full report. It's at bottom. But of course, inside the report, there's commentary about the speed of the move, giving alert or rise to a regression to the mean potentiality. So we have written up that report and summarized it. There is a chart. The chart is titled Gold's Recent Surge Defined Historical Trends, reaching $3,000 in record time. Not implying it will continue, implying that it should pause. There are 5 parts of this report that we'd like to summarize for you presently. Gold broke 3,000, but that's not the real story. The latest report from WGC frames the price milestone as more psychological than structural. 3,000 is round, clean, and media friendly, but the real story is what pushed gold higher and what happens next. Momentum matters more than milestones. Gold's move from 2,500 to 3,000 happened in just 210 days, they note. That's not typical. Historically, gold has taken years to make similar $500 leaps. The average is 1,708 days. This time, it blew past that pace. That speed reflects strong tailwinds, inflation, geopolitical stress, softening rates, and a weaker dollar. All of them are still in play. We are summarizing this report for you. In other words, the price is a symptom. The disease or opportunity is everything else. Of course, our own little spin on it. Deviation signals heat. Gold surge also pushed it to 3 standard deviations above its 200-day moving average. That kind of divergence doesn't happen often. The last 2 times, COVID and the run up to 2,500. In both cases, gold paused, consolidated, and then resumed climbing. If history rhymes, expect a short breather, not a reversal. What comes next? Well, there are 2 paths. The report outlines 2 likely scenarios. One, gold consolidate but stays above 3,000. If that happens, expect derivative-fueled momentum. WGC estimates nearly $24 billion in options tied to U.S. gold ETFs and futures expire within days of their report, and much of it is positioned for upside, essentially implying that if it goes up, it's because of derivatives. Okay, that kind of exposure can create a feedback loop. Prices rise, options kick in, and more buying follows. Essentially a short squeeze concept. That did not materialize. 2, short-term profit-taking hits. Jewelry demand softens, recycling ticks up, and prices stall. That's not bearish, just normal. In a market like this, consolidation is a weakness. It's breathing room. Don't confuse psychology with fundamentals, framing what they said how we would like to say it. Yes, $3,000 is a big number, but the market reaction depends on the fundamentals. According to the WGC, investment demand is still underpinned by instability. That's the anchor, not the number that you see on the screen. If anything, the report suggests the price move is catching up to the underlying conditions, not getting ahead of them, despite the calls for a sideways movement. Final take, the milestone is flashy. We all can see that. But the structure beneath it is solid. Don't over-focus on the round number. Watch the seasons and reasons behind it. As long as the world stays uncertain, gold will stay bid. The only comment we'll make at this moment is the data they're describing in the report is accurate. It gives no emphasis on the pre-2022, when the war started, 2022 in February, to now. It does not look at it as 2 eras. We do. And so because of that, the data is artificially bifurcated in an area that really doesn't deserve bifurcating. So in summary, it means that the data that they're presenting, while accurate, assumes no secular or life-altering events in the marketplace. But we know that there have been some, especially the one referred to in 2022. So dividing lines of $500 and psychological numbers in days, while they're statistically true, and should be heeded over the long term. Well, we think the long term changed in January, February of 2022. That full report and some more commentary is at the bottom. Markets recap. Moving on to the markets in general. Stocks closed sharply higher and Treasury yields climbed after reports that President Donald Trump's tariff plan may use a more targeted approach than previously thought, boosting risk appetite. The dollar strengthened as U.S. business activity picked up in March, and that pushed gold lower. Oil prices were up on Venezuela oil and gas tariffs. Oil and gas tariffs. Read that wrong. Gold specifically, gold prices dropped as the dollar touched an over 2-week high, while investors took stock of U.S. President Donald Trump's more cautious stance on tariffs against trading partners. We're going to touch on to give you a grid on how to understand what Trump is doing, at least behaviorally, in the next section. So that's the news. That's the reality check. Onshoring continues in the market news. The thing we want to focus on first here is the very top comment or news item. President Trump said that he might soften reciprocal tariffs he plans to impose on U.S. trading partners next month, and what nations might be exempt. Okay, there are two things we want to just leave here with you as people who may or may not be familiar with Trump's approach to things. And they are Trump's approach to all things business. From real estate in the 80s, when I was a newbie being tutored by other financial people, to his political deal making, to his business deal making, to his horse trading style. And those two things are as follows. Number one, he's a pollster. He'll throw an idea out there if he can get away with it, meaning there's not going to be big pushback against it. And as president, there's not much pushback against these ideas. He'll throw an idea out there, see how it goes over, see how people react to it, and then recalibrate. He's done it with tariffs from the beginning. I'm going to tariff everyone. I'm going to tariff Mexico and Canada. And then I'm going to start to carve out certain industries within Mexico and Canada. And then I'm going to tariff everyone, which is where we are now. And then I'm going to do carve outs on that. So he's finding his way tactically into implementing a strategic plan of making people pay more for access to the U.S. That's all this is. The U.S., forgetting about the consumer or the tariffs or the taxes, the U.S. is changing its economic payment chain, the opposite of the supply chain, to make the world pay for access to our payment chain. Okay, that's really, really big picture way of saying we're taxing the world on talking to us. We're charging an ATM fee on everything you do with us now. And it's a completely valid way to handle your business in a world that says we don't want to use dollars anymore, multipolarity, et cetera, et cetera. That's the first part. The second part is Trump has a history of being a bully. Now, that's not a negative statement. What I mean is a bully will typically be rough on allies and be gentle with enemies in the beginning. So Trump, you would think, would be hugging Mexico and Canada and maybe a little bit of a hug of Europe. He's not. He's basically saying, suck it up. You're with me. You're stuck with me. And so now you're going to have to abide by my rules. The free ride is over. And then to the enemies, or to the people he's actually negotiating with, not Mexico, not Canada, not even Europe, it's Russia and China. Russia for oil, China for trade. He will be nice publicly. Okay? As his plan becomes more successful, that will flip. He will say to Canada, Mexico, great place, love those people, want to build a hotel there, and we're going to give them favored nation status, some super secret cool thing. And subsidies will ensue. And having gotten them to capitulate, at least publicly, to his demands, then he will go from stick to carrot. Now, the people he's really negotiating with, he's publicly almost gushing over them. Oh, they're good people. We like to. Behind the scenes, we don't know what he's doing. He's probably not gushing over them. And as his position solidifies domestically, even geographically, okay, his tone with the people he's negotiating with will go from, you're a pretty good guy, to, hey, I'm not fucking around here. Okay, that's if he's successful. Look for that change in tone. If he's not successful in closing the loop and presenting a united front for the real final bosses, in this case, Russia for oil and China for trade, well, then he'll go more tactical. And more tactical means he needs a weaker dollar and he needs lower oil, whether he gets it from the Saudis and Putin or not, that's what he needs, and that's pursuant to Besant's plan. All right, so that's a framework on how to interpret everything you see. So every day the press is like, Trump's doing this, Trump's doing that. Just look at it that way, and you'll be able to survive the noise and go on and live your life. All right. We also want to note that the South Korean conglomerate Hyundai on Monday announced a roughly $21 billion investment in U.S. onshoring. Pretty cool. Korean chip, cool. Let's see what they got for that. Korean chip startup Furiosa AI has turned down an $800 million takeover offer from Meta Platforms, choosing instead to grow the business as an independent company. Onshoring to the U.S., onshoring to Korea, or keeping it onshore to Korea. Those are the stories that we wanted to focus on today. This week is PCE and GDP. Today's new home sales. It's 8:19 now. We'll do a quick chart check, but in premium, there's the story we put out yesterday, and really it's a combination of gold-based stories. World Gold Center, World Gold Council, gold reached $3,000 in record time. There's a story there. Well, there are several stories there. We're not going to divulge too much about, except to say that if you're a gold and silver person, you definitely want to read them. We have some analysis and further reports. Let's look at the charts for a second. There's a gold 6-month chart. I was looking at the data that the World Gold Council was talking about. I wanted to see it with my own version of things. Anyway, let's go to the daily. That's gold futures. Let's go to gold, right? Let's zoom in. Okay, so now you see it. And let's get rid of, let's put back, well, I don't really have a lot of lines here. Okay, so yesterday I mentioned the 2-day retracement. Well, it's not 2 days, it's 3 days, but it's holding above a certain area. I believe I gave 3 areas in drawing form. Those drawings were not saved. 2988 to 3000 is support. That's where the buying is. And sure enough, that buying came in. Between here and say 3040 is a dead zone. And above that, you should have reignition. Below 2988, if you're worried about that sort of thing, we could go as low as 2940 and everything would be fine. But all these gyrations are a byproduct of news items coming out. We mentioned yesterday, April 2nd was an important date. I'm going to add to that, or qualify that by saying news is coming out before April 2nd happens. So April 2nd could be a nothing burger date. Like, for example, yesterday, Trump has said he's going to carve out, he's going to make exceptions. Well, he's probably in some way tactically backtracking on April 2nd. And when April 2nd comes, it won't be such a monster event. You can see what happened to stocks yesterday in part as a result of that, and to gold as well. Note, Trump backing off of tariffs is bullish for the dollar. That wasn't how it was framed when this whole thing started, right? Okay, well, that's because they want a weaker dollar. The other thing is the more important thing. And the more important thing is, even if there are dips between now and April 2nd, or even if there are dips on April 3rd, or even if there are sell-offs, we believe that macro discretionary and the bigger, savvier players are looking at this market as another event. And the event is, or signpost, if you will. The event is July 1st. And that's when Basel III begins to be implemented over a 3-year period. The repatriation of gold is at least in part to that effect. The repatriation of silver, the movement of silver from PSLV to SLV, the movement of silver from London to here, the movement of gold from London to COMEX. It's all in preparation for a U.S. true up. To what ends, we're not sure yet, but we've mentioned some reasons that we think it's happening. Anyway, so that's the gold chart. So go back to sleep unless it goes over below 29.40 or above the recent or above 30.40. Silver is a little bit different. And I'm going to paraphrase Michael Oliver, who's actually, again, come to a conclusion that we've come to from a different point of view. Silver's going a lot higher, but it's not just going a lot higher in a normal fashion. It's going to go a lot higher in fits and starts. It's constantly shorted to make it easier to buy gold for central banks. And it has been kicked down the road fiscally, and I'm not fiscally, fundamentally and physically for years. And most recently, since 2022, as gold started to ramp up. And every so often, it reminds them that they have to cover it. And you're seeing that right now. Michael Oliver's point, we're in another phase of a silver's rally. And because of that phase, you're going to see an increase in volatility, right? So it won't be 2 steps forward, 1 step back. It'll be 7 steps forward, 4 steps back, if you want to look at it that way. That line we drew the day before, and we saved it. It held. There you go. It's like it knows the line is there. Anyway, I will say that our just to be sane, this was our measured move, right? And the measured move is supposed to go to 35. And until we close below this line, which is the top of our V, we're still bullish. If you're bullish like we are, this is actually the level you should be buying. A retest of the line, which is really, it's basically, it was resistance for a long period of time. It was resistance, 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 all the way back to here. And a retest and buy, well, that's physical demand overwhelming financial selling. I'm Vince. Have a great day.